Palantir. Technology's stock is up more than 1,000% over the past 2 years, and yet some investors consider it one of the most dangerous AI stocks on the market. How is that possible? It's one of the best performing stocks of the decade, but it's also one of the most polarizing companies in America. Some see it as the future of AI infrastructure. Others see serious problems with its valuation and business model. And the truth? It's somewhere in between. This is Palantir, and here's what you actually need to know. Let's start with what Palantir actually does. The company builds platforms that connect, analyze, and act on massive amounts of data, often in real time. In other words, it takes the chaos of data and turns it into decisions. It has two main products, Gotham and Foundry. Gotham is used by intelligence agencies, the military, and law enforcement. Foundry is used by commercial companies, hospitals, banks, airlines, and energy companies. Palantir was founded in 2003, and one of its early investors was In-Q-Tel, the investment arm of the CIA. That matters, because this origin shapes the entire story of the company, both the positive and the negative side. Now, the numbers. In the fourth quarter of 2025, the company generated $1.41 billion in revenue, a 70% increase year over year. U.S. commercial revenue grew by 137%. Government revenue grew by 66%. For 2026, the company expects revenue of around $7.2 billion, which would represent growth of over 60%. That kind of growth is extremely rare for a company of this size. What about contracts? Palantir has an exceptionally strong pipeline. For example, a framework agreement with the U.S. Army could reach up to $10 billion. The Pentagon awarded a contract worth hundreds of millions for the Maven AI system, technology for battlefield data analysis. And more contracts are coming from both the U.S. and Europe. This creates what investors call a defense mode. In other words, once you deploy Palantir into a system, it's very hard to replace. And here we get to one of the most interesting parts of the entire story. Today, Palantir works directly with NVIDIA, the company at the center of the AI revolution. NVIDIA provides the power, chips, and infrastructure. Palantir provides the software, the platform that turns data into actionable decisions. NVIDIA is the brain and muscle. Palantir is the operating system. Together, they're trying to build a complete AI solution from chip to decision. But it's important to say one thing. Palantir doesn't build its own AI models or hardware. It sits on top of the ecosystem and partly depends on it. And that's a key difference compared to companies like NVIDIA, Microsoft, or Google, which control a larger part of the AI stack. What do analysts say? Wall Street's consensus is surprisingly positive. Most analysts have a buy or moderate buy rating. The average 12-month price target is around $194. The highest target is $260, a potential upside of over 50%. But the lowest target is $70, a drop of more than half. The range from $70 to $260 shows just how much the market disagrees on the true value of this company. Now comes the other side. The first problem is valuation. As of the recording date of this video, Palantir trades at a P/E ratio of around 200. That means an investor is paying roughly $200 for every $1 of earnings. The forward P/E is approximately 110. For comparison, Microsoft is around 30, NVIDIA is around 40. Palantir is not a cheap stock. Palantir is a stock priced for perfection. And that means one thing. There's no room for error. And the market has already started to signal this. From its highs, the stock has dropped by tens of percent. All it took was the first major concern about competition. The second problem is competition itself. Companies like Microsoft, Google, and Amazon are investing billions in AI solutions, and pressure is also coming from new players like Anthropic. In other words, Palantir is not the only one trying to dominate AI. The third factor is controversy. Palantir is regularly part of political debates, media criticism, and public protests. For example, its collaboration with the immigration agency ICE drew strong criticism from human rights organizations. And that has one important consequence. Some investment funds, especially those with ESG mandates, cannot hold this stock at all. The fourth factor is leadership. CEO Alex Karp is one of the most prominent voices in the tech world. He openly advocates for the role of technology in defending Western democracies. For some investors, that's a strong vision. For others, it's a warning sign. So what do I think about Palantir? At the current price, I wouldn't buy it, not even despite its exceptional growth. The business is real, the contracts are real, the growth is exceptional. But the valuation means that most of the good news is already priced in, and any setback could mean a drop of tens of %. And there's one more factor. Attention. Palantir is an extremely closely watched stock, and every new headline, positive or negative, can significantly move the price. At this valuation, that's a risk I personally don't want to take. But I understand that others see it differently. Some see Palantir as a key technology of the future. Others reject it entirely. Both sides have their arguments. For me as an investor, there are two main problems: a valuation that leaves no room for error, and a high level of attention that creates volatility. I'd rather look for companies with similar growth, but a more reasonable price and a calmer media profile. If you see it differently, write it in the comments. I'd love to read why you disagree. And if this video helped you understand Palantir better, don't forget to subscribe for more analysis.